Now this week's video is basically completing the trilogy of videos that I'm putting together on a certain topic. Remember a couple of weeks ago I talked about the Forex loser, and if you're ticking certain boxes in those categories that maybe you should be taking a break. And last week's video I talked about what it takes to become a Forex winner. Remember, ditching all those indicators, all those bells and whistles that you see when you log on to your trading platform, all the different stochastics, MACDs, Bollinger Bands, RSIs and all that, which makes people think there's some magic out there. I'll talk to you about how to keep it simple, that simple strategies are the best and most effective. It's really important that I think you get to understand this. Do not think by going to an educator out there, paying $2,500 or $3,000 or $5,000, I've seen some even more than that, that they are going to give you the magic. They're going to give you the magic sauce that's going to make you a trader, the holy grail strategy. It doesn't exist. Trading is within you, not within the strategy. Now, of course, you need a strategy with a slight edge, and that's exactly what this video today is going to be about. I'm going to use simple price action. We spoke about that last week. Do go and check that video out if you haven't seen it. We're going to use simple price action, which is the bullish engulfers, the bearish engulfers, bullish pin bars and bearish pin bars. And I'm going to use this in 3 different trading conditions. We're going to use that in trend following. We're going to use it in range bound markets, and we're going to use it for counter trend trading as well. Some very simple rules that I want you to go away and back test, put into a trade plan, and then maybe try this out for yourself on a demo account, keeping a track of all your results, of which I would love to see as well. If you care to send me those as well, I'm happy to receive them and have a look at them. Right, we'll jump onto the screens now. I'll outline some basic rules of the strategy, and then I want you, as I say, to go away and do some back testing. Okay, so as I said, we're going to look at 3 market conditions where you can use the simple price action patterns when developing your trading strategy. Now remember, no one is going to give you the perfect trading strategy. It's far better to develop your own and get the confidence with back testing. And these are going to be some pointers on how you can help develop your own strategy if you follow this methodology, keeping it very, very simple. And it's using these simple price action patterns that I spoke about. Now, if you're not familiar with these, I'm not going to go too much into detail about these now. We did cover that in last week's video, which you can watch in your own time. But we're basically looking for the bullish engulfer, the bearish engulfer, the bullish pin and bearish pin. It basically tells us who is winning the battle, the buyers or the sellers. And when you look at these at key levels on a chart, they can indeed be very, very powerful. Let's start off by looking at the reversal pattern. Now this is a bullish reversal pattern. So what you can see here, we have a downtrend in play. Markets are making lower highs and lower lows. And then we come into this level of support. Now we don't know whether this level of support is going to hold or whether it's going to reverse on itself. You never know that. It could carry on going or it could bounce back. So we use the simple price action patterns to give us a clue. And we use basically these here. This is the bullish pin bar, or indeed we could use the bullish engulfer. Here you'll see that the sellers took us through, then the buyers came back in and overpowered those sellers. Same here, the sellers took us through on this red candle, but then the next candle, the buyers took over and overpowered the sellers, showing you that this level of support is being respected. Now, where you could enter a potential trade here would be to look for a break higher of that pattern, maybe 5 pips or something like that. Now, always when you're placing a trade, you should have a stop in place as well. The stop could go below the pattern as well. And when you do that, when you place the trade and place the stop, you're establishing an initial risk, the distance between the two. Now, if you position size accordingly, your risk should be controlled. So it doesn't matter how big the stop is, your risk should always be determined at a maximum percentage, maybe 1/4% or 0.5% or so forth. You're not going to be blowing up too many trading accounts if you're risking just 1/4% on each trade. And of course, when you're placing a trade, not only do you use stops, but you should also have profit targets as well. I like to use the next level of support or resistance, supply and demand, for a potential target. But I also like to say that you have at least a 1-to-1 on your profit target. Now, we do have strategies where we have less than 1-to-1, but that has different exit rules as well. That is all part of a different strategy that I trade. But ideally, when you're setting up your trading strategy following on from this video, have at least 1-to-1 for your back testing. Maybe have the next level of resistance support as your profit target, or maybe you want to use a 1.2 or 1.3 of risk to reward. So you might want to risk $1 to make $1.30 and so forth. But again, you've got to play with these numbers. No one is going to hand you a strategy on a plate. No strategy is without its losing trades as well, but you only get to know that when, of course, you do your back testing. So this is the bullish reversal. Now let's have a look at the reverse. This is a bearish reversal. So here you'll see the trend is up. Okay, we come up to resistance here. Buyers take us through resistance, but then the sellers come in and we close lower than the resistance zone. Same here, buyers took us through on this 2-candle pattern. Buyers in control, then the sellers come in the next candle and take us lower as well. So this is a bearish pattern, and the same entry rules would apply. So you may have your entry below the pattern there, 3 to 5 pips, something like that. Remember, you've got to place your stop as well, and that establishes your risk predetermined, 0.25%, 0.5%. Make sure you position size. That is covered in a different video, different training. And of course, have your profit targets. Now, in case of a bearish reversal, maybe you look to see the next level of demand, the next support zone for your profit target, and have at least 1-to-1 on risk. Do this time and time again. I think you'd be pretty surprised at the result. Now, that is a reversal, but the same methodology applies with trend as well. So here we can see an uptrend. And what I've done here to determine my uptrend is basically use some moving averages. Now, it doesn't really matter what you use. You need a fast, a medium, and a slow moving average. So the fast moving average on this case would be, say, maybe an 8 moving average. The medium maybe a 13, and then you've got maybe a 21. You might want to use 10, 20, 40. So the size of the moving average doesn't really matter so much. But as long as they're fanned out, all pointing in the one direction, that shows you a good trend is in play. Confirm that, of course, on the higher time frame, which gives you the bigger picture of the trend. And when you see prices pulling back into the trend with this like a red candle here, is that going to be a reversal? Are we going to move all the way back down? Well, we don't know. We wait for the next candle. If the next candle is, as it is, a green candle, fully engulfing, then that is an indication that that is just a pullback and it's not a reversal. Same rules apply. So you might have an entry at the break of the pattern to the upside. You'd have a stop in place. That, of course, establishes the initial risk, and your first profit target, again, at least 1-to-1 on your risk, and you can take that trade higher. So that's the bullish engulfer. Again, here you've got the bullish pin as well. Exactly the same principle as the sellers are overpowered by the buyers, creating this main body. Closing in the top third of the candle. So that, of course, is an uptrend. We can have a downtrend as well, exactly the same, but in reverse. And here is the downtrend. Moving averages all facing down. We pull back into the moving averages. Buyers are in control. Then the sellers take control, indicating that that is just a little bit of a pullback, not a reversal. Same here. The pullback is indicated with this high wicked candle into the moving averages, but we close in the direction of the trend lower. Doesn't really matter what the color of this is, green or blue, green or red. It indicates that the buyers are remaining in control, and the same rules of entry. You have a sell maybe just a few pips below the candle pattern with a stop above. You're establishing the risk no more than 0.25%, 0.5%, or what have you. And you have your profit target, which is at least 1-to-1. You may have rules of exits where you exit or you move stops to break even at 1-to-1, going for the bigger move. I like to take profits as well. Maybe trade at 1.2, 1.5. Maybe use the next level of support as your next level where you look to take profits. As long as you get a 1-to-1 out of it, maybe that is something you want to explore. No one's going to give you the strategy. Go away and play with this simple price action. And lastly, let's look at range trading. Now, in order to determine that the market is in range, it's a good idea maybe sometimes to look at the moving averages. If the moving averages are all bunched up and they're not fanning out in any particular direction, the price is just basically oscillating above and below, then that is a good indication that the market is in range. Again, looking at the higher time frame to determine that the market is in range is pretty crucial. And then you'll see levels of resistance, levels of supply, levels of support. That's basically where demand is coming in. When you see prices moving away from the moving averages into those levels of resistance, into those levels of support, and you see this price action, it's showing you that the price may now want to move back and close that gap into the moving averages, as you can see with my arrows here. A bit of an indication. Stops again in the same place above the pattern. You've got to make sure you get the risk reward on this one as well. You don't want to be taking a trade just with that type of reward when you've got that much of a risk. So you can play with that. You might want to enter at the at a bit of a pullback into this pattern as well. But again, on a real chart, it would look very, very different. That's quite a good segue. Let's now go and look at a real price chart. Look at these 3 examples on real life charts to see if indeed I'm talking anything that you can use going forward. Come on. Okay, so let's start off by looking at the reversals. That's basically trend change. Now, as I say, you can use these on all time frames. However, I like to use reversals on the higher time frame, maybe the 4-hour, the daily, certainly the weekly. When you see them out there, they can be indeed very powerful. And you want to do these at key levels of supply and demand, support and resistance. So this is the pound against the Swiss franc. This is a 4-hour chart. You see me broken into trend down here. Okay, and we have a nice little pattern at the bottom there. That is a bullish pin bar. So typically you would have your entry around there, you'd have your stops below, and you'll be enjoying that ride all the way up. And then up here we have another bearish pin bar indicating a trend change yet again. So the same rules would apply. You would have your entry there, your stop there, and if you enjoyed this ride down, you might have got this pullback as well. You might have been caught on that, but your stops up there, you would have still been in that trend all the way down, maybe taking better than 1-to-1 risk reward ratio. And then we get down to the bottom down here, and you'll see this. What's this? This is a bullish engulfing pattern at the bottom of this trend. Okay, so you would have had your trade entry around there, your stops have been there, you've enjoyed it all the way up again, and up here you'll see this is a bearish pin engulfing the previous candle as well. So this is almost a bearish pin and a bearish engulfer, enjoying that ride down to the bottom, getting at least a 1-to-1. Stops above there, of course. Down to the bottom, well, not quite a bullish engulfer there, pretty close. Certainly you could consider that as a bullish pin bar, enjoying that. So that's basically the reversals. As I say, you want to be doing these at key levels of support and resistance, and obviously always using stops as well. The higher time frame for me are the better, but I encourage you to go and test on all time frames should you wish to trade the lower time frames. But these are pretty powerful reversal patterns. Okay, so now let's look at trend following. Clearly we're in an uptrend here, so I'm looking for pullbacks into the moving averages. I'm looking for the bullish pin bars and the bullish engulfing patterns. Remember, I'm not taking any sell trades. The uptrend is in play, confirmed on the higher time frame as well. Now, literally, I'm not cherry picking these. I'm just going back, looking at time. Of course, this is hindsight, but that's what we do when we analyze charts. For back testing, we look back in time. Okay, so let's just have a look here to see if we can see any entries that we would have had on this currency pair. Right, found out moving averages. First off, I can see a pattern entry there. Pull back into the moving averages. You'd have your entry there. You'd have a stop there. That would have been quite a nice one. You've got some more pullbacks into the moving averages here. There is indeed a nice bullish pattern there, entry there, stops below. We've got another bullish pattern there. Again, we're not taking any of these sell trades, we're just ignoring those. We're only looking for buys. There's another bullish pattern there. Reasons to get into the trade, your stop's going to be low. You wouldn't have got stopped out with this one. You've got another bullish engulfing pattern there. So it pulls back into the moving averages. Is it a trend change? No, the confirmation of trend continuation is with this candle. So you have your entry there, your stops back there as well. Let's just scroll on through. So you got a bullish pin bar there. You got a bullish pin bar in there, maybe a bullish engulfer as well. You've certainly got just to touch the moving average there, but it counts. Bullish pin bar there. And of course, then you go into consolidation. The moving averages are joining on to themselves, basically converging. So you wouldn't be getting involved in that. You want to be seeing the moving averages and nicely fanned out as you go. Just now looking, scrolling on through, we sort of break into downtrend now, don't we? So we're looking for sell trades only. For pullbacks into the moving averages. You may have had a sell trade. Obviously, you need to confirm this on the higher time frame as well. Especially not confirmed yet, but you've got a pullback there, bearish patterns there. You've got some bearish pins. Moving averages a bit bunched up. Most people wouldn't take those, there you go. Let's have a look. Yeah, it goes into consolidation. Here we've got a bit of a downtrend in play. Here's one, bearish engulfer. You must have got stopped out on that one. You'd have entered there. Well, you actually wouldn't have entered. It wouldn't have triggered. But that's the point of waiting for the confirmation of the break of the pattern. So you wouldn't have entered that one. So that's basically the trend following. Go away and have a look at it. Waiting for the pullbacks into the moving averages. You can use the 8, 13, 21. Also quite like using, as I say, the 10, 20, 40 as well. Get yours written down and go on way and back testing. There's certainly something there to help you formulate your trading strategy. Your trading strategy, not anyone else's, yours. Most important thing you can do in trading. Not thinking you can go and buy one for $2.5 grand off some educator. Okay, so before we wrap up, let me just introduce you to this pattern finder tool. Now you can get these out there. I've seen some available. Normally have to pay for them, but basically if you're worried about waiting for these patterns to present themselves and you think about the screen time, what have you, you can get yourself something like this. It basically does all the work for you, searching for these patterns. Now we do have one available which is free to our members inside the trading room, which, as you know, you can always try out for free anyway. But basically you just literally select the engulfing patterns, the pin bars here, you select the time frame, and let's just have a look for the sake of this. I'll do 1 hour and 4. I don't know if anything's going to come up. Activate scan, and it'll show you a couple of patterns here. You had a 1 hour engulfing pattern on the pound against the New Zealand. You click on there and it basically would highlight to you the pattern. And in fact here, as we talk, you've had this bullish pattern arrive in the pound New Zealand with the found out moving averages. Again, that is must be not a bad little trade done in real time. So it does all the work for you. It sends notifications to your phone as well. And what's this other one? This is the CAD against the Japanese yen. Okay, so we've got a bullish pin bar here. Certainly not counter trend. Certainly not trend following. You may have this as one of those range trading markets where prices move back into the moving averages, as I spoke about. Moving averages are all bunched up, so market is not in trend at the moment. Might have had one up there as well, putting back in. So that's basically a tool that does all the work for you, should you be interested. Okay, so I hope you found that useful. Certainly gives you something to go away and work with now. Remember, you don't need to be spending $5,000 on trader education. Everything is within you. Keep it simple. Now, you know, the biggest reason why traders fail in this business is because they don't put the work in. They think it's going to be handed to them on a plate. You need to put some work in. Those that fail don't put the work in. If you're different, then there's certainly a lucrative career ahead of you. Now, if you like this video, give me a thumbs up, give me a thumbs down. If you didn't, don't forget to leave a comment. Now, if you want to leave me your results of your back testing here as well, I'll be happy to look at them and review them as well. Don't forget to subscribe to the channel if you don't already do so, and hit that bell notification that will notify you when we release the next video, which, as you know, is a couple of times a week now. Don't forget you can follow us on all the socials. Now, we are streaming live around the clock, looking for trading opportunities, pretty much like we're looking at there with these price action patterns and so forth. We've got a trading community, vibrant community of like-minded traders, all reviewing and analysing the markets. As I say, we're streaming up to 7 times a day now, around the clock. If you want to come and join that, take part, you can do so. Why not take out a 7-day free trial, see what it's all about. If it's not for you, that is not a problem. You don't have to stay, you don't have to pay. Again, if that is not your thing, that is not a problem. I look forward to seeing you next week, and have a good week.